Hi, hello
Ashok,
friends. Welcome everyone to Invest in India's largest retail investors online conference. I'm Ashok Devanampriya, the CEO of Traders Gurukul and also the host for today's program. It's a great pleasure to invite every one of you into the first edition of Invest in. I'm sure by the end of this program, you will have a lot of knowledge which can help you to make better decisions in your investing life. I would like to thank our media partner, Money Control Pro, the largest financial portal in India with millions of daily readership on their website, who helped us to reach a wider audience in a short span of time. And also, I would like to appreciate our title sponsor, Sher Khan, one of the leading stockbrokers in India with millions of investors as their customers. The speaker for today is Mr. Prateek Agarwal from Mumbai. He's the business head and CIO of Ask Investment Managers Limited. He's an electronics engineer from NIT Rourkela and a PGDM from XIM Bhubaneswar. He has close to 26 years of capital market experience in research investment banking on buy side. He was a head of research at SBI Capital Markets and helped several companies getting listed and also participated in several advisory mandates in telecom, metals and power spaces. In his previous roles, he was heading the equities at Bharti AXA Investment Managers and ABN AMRO Bank Asset Management Limited. He joined Ask way back in 2011 when the AUM was just about 1,100 crores. Today, Ask is the largest house in PMS space with an AUM of over 34,000 crores. He is going to empower us today on his topic, Prateek Agarwal's investment philosophy. Mr. Prateek, on behalf of Traders Gurukul, Money Control Pro, Sher Khan, I extend my warm welcome into this program as an elite speaker. It's really a great pleasure to have you on board. We are honored to attend your program today. Go ahead, sir. The stage is yours.
thank you, Ashok. Thank you, everybody. Good evening. Let me start by giving you some sense of the market as we see it. Uh, for any thesis to work out, we have to look at the underlying. We are uh, growth at a reasonable price investors. In some sense, I will come to it later, but in some sense, marrying high quality businesses with capability of growing well, not for 1 year but multiple years. Now, this is possible only when the underlying economy provide some amount of tailwinds. It cannot be that economic growth is not there and yet you find a lot of businesses which can do what we want over a long period of time. So economic growth definitely helps our cause. It helps that India is one of the fastest growing economies globally and should continue to be that way for the next decade. That is our hope. We do believe the next decade would be the decade of India. Now, the economy has grown, it has come back to pre-COVID highs, but the recovery has been K-shaped. There is one section of the population which has done very well and pulled up the economy, but there is another section which has not been able to do as well, which will drive the economy in the next period. So what will happen is the part which has performed well will now start to spend. COVID has receded, India has opened up, and the part which the self-employed part of the economy is now rapidly finding work and will drive the next leg. Second, it is consumption in the immediate future, but capex is also starting to support. Government capex continues to be strong. The budget has allocated more monies this time around to capex. Overall, with the PLI schemes, we are looking at over economic growth rate of capex spends. and it helps that even households supported by lower interest rates, frankly, multi-year low interest rates, if not lowest interest rates ever, and housing prices having been stagnant for the last 5 to 6 years, are now able to buy houses, and that segment is also delivering strong growth. So that is basically the thesis. It is one part after the other. Consumption in the immediate term, followed by some amount of, or supported by some amount of government capex, supported by household capex, and in the medium to long term, the corporate capex will kick in as the growth journey gains traction. Now, this thing, kind of tries to validate what I have said. The proof of the pudding is in the eating. Government GST collections, which are a great indicator of economic activity coming back to pre-COVID levels, is showing sustained high level, indicating the same. And yes, there is problem. So on this slide, if you look at construction workers, there the growth is low. If you look at trade, hotels, transport, etc., there it is actually negative. So the contact intensive services are yet to come back. And like I said, as the economy opens up, as COVID has receded, this is the part which will drive growth in the next period. So while all of this is happening, one big enabler of growth is government policy. Now, government policy, has been very supportive of growth. If you look at how an RBI has been, even now when there is so much of inflation all around us, RBI has been keeping liquidity good. They have kept interest rates low, and they are talking growth. Government is talking growth. Every arm of the government is talking growth. So yes, we are getting reforms which are happening very, very quickly. But now the reforms are all pro-industry, pro-employment, trying to get people back into jobs, get people back on their feet. There is stress all around. Policymakers are aware of this stress. They are doing whatever is possible without overspending. Keeping the focus on fisc, to get back people back on the feet. So the slide lists all the many of the, I should say, actions that the government has taken over the past period. Anything that impacts business sentiment, you have seen them address. Retrospective taxation issues, telecom, bad bank has been approved, Air India has been privatized, 6 trillion asset monetization plan has been put forth, and it is happening like clockwork. First they say, then they identify, then they make it public, and then interest is sought. The assets are sold.